Hello, hello, good morning.
And I
Welcome to another ES Future Trading video. This is Victor here. Today is Monday, November 6th. It is 9:20 Eastern Time in the US. I hope you have watched yesterday's update. I am very neutral in this market. I'm very aware of what's happening here. I have just finished my homework here, and what we have here in this market is we have this market going down, right? We have a trending, for 4 months going lower, and this month we are only traded like 3 days in this month. Yeah, only 3 days in this month, and the market has almost reached the previous month high, right? Just that is getting out of this range. This, as we will see, this is a very important level now. This level is just check here the high. This level is 44.23. Okay, this is the high of the previous month range. Now, if you check the weekly, the 44, this level here, this high, which is this high over here, it's also important level because this is a day or 2 weeks that don't have excess in the upper side. No, this is the high of this 1, 2, 3 day range here, 4-day range actually, and this high has no excess. The market took this high for maybe a couple points and then checked the lower side and has some downside extension, get back into this range, took the low. I mean, they did not take the low. They have no excess here. This low has no excess relative to this 3 weeks back from May, June, something like that. In just 2 to 3 days, the market has almost reached this high. Right? So now we have 44.23, 44.23 in 2 time frames. The next thing we see in the daily, you check the daily, we have this impressive, unbelievable short cover rally, this vicious short cover rally we have here, right? All of these shorts have been forced to cover or have been squeezed, right? And the potential is still there, right? You have this high, 1, 2, 3, 4, 5, maybe 6 highs here. That has a lot. There's a lot. Just guess what do we have here, up here. There's a lot of stops there, and there's a gap here. So this is also a level, important level. This is the 44.23. Just check this day, right? Check the high again in this day, 44.23. Okay, this level, the 44.23, is an important reference, or it is a reference, or it's a multi-time frame reference, right? It's on daily, weekly, and monthly. And in the past, what has happened when we have these references are once the market takes this reference, there's usually there's some significant extension to the upside, which could be in this case, or to the lower side, which has been in the past. But the difference now, I mean, the context is we have this unbelievable short cover. Right? The market was very short here, and now it's very long. Inventory is very long here, right? And the way how this market has been trading. Notice also how, what the high and the low of this day is. High is right at 50 and low is right at 200. So very mechanical trading here. And notice, in just 3 days, 1, 2, 3, 1, 2, 3, 4. In 4 days, we have 3 gaps here. Right? 3 gaps here in this market. Is is the market going to have upside extension? I think if the market has upside extension here, that would be really bad, extremely dangerous for this market to have, because there will be no rebalancing of this rally. The same thing happened at the break. There was something here, but not enough for the market, to have some rebalancing of the short to continue its break. And as a consequence, we are having this rally now. Now, if we check what I have done here, if we check the market profile charts, we see here how this market has been traded. Right? Look at where this low is. Just a couple ticks, a couple hundred, less than 200 from the 200. The high is the same distance. My God, the same 1.5 hundreds from the 50, 1.5 hundreds from the 200. We have a gap below. We have a tremendous gap in the upper side here. Remember this area? There was a gap in the daily. Notice there's no excess here. The action to the upside wasn't completed here. There's a bunch of highs here, all this together, and a gap here. Most of these highs were weak, poor, or both. Now, this rally, every single low is weak, poor, or both. Weak, poor high, poor low here. This is also coming from half back here. This is coming from POC here. This low coming from this high. This low coming from this one. This is it's a little bit better, we'll say, but already very extended to the upside. But just notice where it has been bought from. And now this one. Every single one, every single low is weak here. And I guess the best thing that can happen for this rally to have some upside extension is maybe the market closing this gap here, or taking some of this profile out, or maybe even coming back all the way down to here. That would be the best thing. My short-term focus is I have this range here. The market has actually already, remove all this inventory. And this is the ultimate destination of this trade. I want to see the market has upside extension above this level. Now the market has the 4,400 here as well. These round numbers. Traders like to see. The traders give a lot of relevance to these century numbers here. Why? Just because it's a round number. Okay, 4,400, 4,300 rarely has any relevance. The 4,350 or 4,250 has a relevance, but my main focus or my main level would be this one here, right now. Now, in the same way, I don't know if you remember what was happening these days. You got, for example, the opening here, shoots up to the outside, and then there's a big retracement here, big pullback. This pullback can scare the hell out of traders, right? Of the longs. This kind of thing has been happening, I think, it was quite often here. You have some significant rally, and the significant thing, the break or the retracement, almost all of the first period has been retraced. All right? And you can see that happening like 3-4 times, something like that. And in this rally, this was not the case. We have two up there. Here, the same thing, but this time, the opposite direction, because the market was coming from a break here. Right? You have no, this is not. The last two. I guess I remember more than two, but those are the ones I can find. Why I'm trying to highlight that, because what happens in one time frame, in this case the intraday, can happen in all time frames. This is what happened you know, if you check the market, for example, if you use a daily time frame or a weekly time frame, that's what's happening in the weekly time frame. You know, you have the market getting too long here. It gets too long and it just breaks out. When the market cannot take, when the market couldn't take this high out, not even get, I was expecting something like the market getting close to maybe half of the gap to sell, but the market didn't do that. There was a rejection, and then the market just sold as, you know, it has a significant break. Now the market is open. Market is open. My charts are not kind of slow today. Notice where this overnight. This is how much volume? Really low volume now. No, really low volume now. Traders are very emotional now. The traders saw the market going higher, higher, and higher. The expectation is the market keep going higher. Prices are advertised. Be careful with prices. I want to see now, you know, because there was significant amount of volume Thursday and Friday. I want to see that. Look at what's happening with volume right now, for example. You know, it's higher than the previous week, the last 10 days, but it's lower. It's lower. It opened like 80,000 the past 2 days, and now 64. Kind of like more in, you know, this is more like in a regular way how the market is. Now the market now, look at this. Inventory is 100% long, right? The market open, okay, I don't care about the long inventory. There's no contraction here so far, right? The next thing, if I want to monitor the market for continuation, I want to see the market taking this high out. It has already taken the overnight high out. Traders are crazy now. They saw the market going higher and higher, and the market is going to keep going higher now. That's what just happens. I'm not anxious to do anything right now, but see what the market does. I consider this market has a really, really high risk in the long side, but it doesn't mean I am going to be short. Okay, because if I short this market, I will be going against the trend. What's the trend? Momentum is to the upside. The trend and momentum is to the upside. All right. Nasdaq is 30% higher for the year. Can you believe that? 30% higher. What kind of investment can give you that much? What kind of business can you have that give you that much money? Now market is having a pullback here. POC is right there. Remember, continuation on this movement we're having here, we'll see the market taking this high out. We got 4,400 right there as well. Traders are buying the dips here. But we are just 3 minutes into the opening here. Oh, before when the market opened, I was checking. I don't know if you remember, you know, when we had these openings, just huge rallies here, right? And then there's a violent pullback. You know, these pullbacks were being really fast, like okay, really fast. This removes these longs. But now that the market is more rebalanced, now that the market has most of these shorts out, you know, what's going to do now? What's going to happen now? There's no inventory there, right? That can be removed now. if the market is going to keep going higher in its volume now, real buyers. Not that the buying was were fake, but when you are short and the market is rallying, the market is moving against you, the way how you cover is you buy. And when you buy is to close your position, to get out of the market. Can you see? There is nothing there. There's just something that's going out. Whereas when you buy, because you think the market is going higher, you are getting into the market. You are having a position there. If the market is going to have that, we will see volume now. Okay. The first indication is this is not that good. The other one is volume is not good. Not that, because it's not as good as it was before. Notice where this market is buying here now. Comes all the way down to the opening and boom, it's buying from there. Where it was bought? How many times it was bought from seller? 1, 2, 3, 4, 5, 6, 7, 8, maybe 9 times bought from seller. This level as well, this is a weak level here. Okay, this is not good because this is exactly at half back previous, a half back of the day. Of this day, the pullback, the late pullback was exactly to half back. That doesn't speak good of the longs here. 6 minutes, okay, 6 minutes. The first 7 are important as well. Market didn't do anything. Market opening inside previous day range, is inside values around POC. Very mechanical buying here. You know, do you see where this market came down to? Exactly the opening. The difference between this day and this day here and this one, especially this one, this market never looked back. You know, never looked back. Now it has come down to this. One of the most important things we have to learn or get used to is to monitor the trade. You know, to monitor the market. And if I don't have a trade, I want to monitor the market. So, you know, monitor the market for continuation. Does the market have upside continuation? No, my next reference is Friday's high. Okay. Friday's high is stopped just short from the 50 and very close from the 4400, which is not a good sign for the short here. No? I understand also that the long is very risky here. It's very risky. My main focus now is the 44.2350, right there. Can the market get to this level here? And after that, can the market close this gap? You know, something that I expecting the market to do, but will actually be something really bad for the market to do. Because the best thing that can happen for this rally to be a sustainable rally is to have some rebalancing here at these areas. I don't know what's happening with the bond market. Bond market is having some selling. No. Friday there was a vicious short covering rally on Friday as well. And now the bond market has almost retraced all of the gains from Friday. I don't think right now. I think the market is decoupling from the bond market. I don't know what the next shiny thing is going to be. Now, all the traders that were short in the market last week, finally will have, I think they will change their minds. Now, I was getting killed last week. Now I know the trades to the upside. I'm going to switch sides now. Now you have a lot of buying here. The mentality. Try to get in the mind of your competence here. What other trades may be doing. Man, this is 9:40 now. It is just the first period. There's good volume here, 11,000. Not weird. It's not unusual. It's just right at center here. The market has get out of this value area high. Notice how low this volume is going to be, This is 10 minutes. 15 minutes should be like this. It's going to be very low. The way how it's doing, now this market may even end kind of like right here. If it does, okay? If it does end like here, it's still very high relative to the last week, with these 2 days, with the exception of these 2 days. It's still going to be really high. Now, if the market comes or closes around this level here, man, I think that would be something really bad. If the market does something like this, close to this kind of like, was it normal? No, usually it's this high. Not even here, down here. This would be a sign now that this is just short covering. All what happened last week was just short covering here. Again, how many times the market has come back to the opening now? This is the third time the market is coming. Sometimes when you have this one, the next thing that happens, you have a really huge selling here, happening really fast, right? Now this is long inventory. Market's trying to keep going higher here. Everything is being bought here. And you may have a violent selling here, maybe to this level or a little bit lower, and then it's bought from this level again. All these longs are removed. Remember, this rally has been vicious here. There's huge short covering rally here. Now, another thing what happens is when volume is low, when volume decreases, the market starts going lower here. And it's also a sign that it's just a rebalancing of this overnight inventory. Inventory is long, and the contraction, what the contraction is of a long inventory? Is a break, right? Now, downside continuation, we see this level taking out, then this one taking out, this one taking out, and then this one taking out. After this, we may have value at a low, and the next thing is very low down here. Why do I have 250s here? I have 150 here. This is the adjusted 50, and this is the non-adjusted 50 moving average. But notice well, I have these levels here to see how the market reacts to them, not to trade from those ones. Right? Did you see where the market has been bought from? This clearly some buying here. Some buying from this level here. Who's buying from that level? Who buys from the 50 moving average? Did you see? Market just kind of like grinding its way down, grinding its way down. It has some acceleration. Once the opening is taken, there's some acceleration here, and boom, it's been bought from this level. The next thing, settle. We are 45 minutes, 15 minutes, 9:45, 15 minutes. What do we have? I forgot to see what kind of events do we have today. Monday, global economic, we don't have anything today. Tomorrow, 1, 2, 3, 4, 5, 6, 7, 8 Fed speakers during the week. Oh boy. We'll have petroleum status report on Wednesday. Jobless, the first weekly jobless claim on Thursday. And what else? Fed balance sheet Thursday as well after the close. Consumer sentiment on Friday. This area, notice where the market has come back to. Again, it's being bought from the 50 here. Do you see what's happening here? Where this market is being bought from, you know? Again, I think most important is settled, but you know, the fact that is the market is being bought from these levels, it just gives me, you know, remember what the market was doing last week, you know, and what traders will do now, you know. I think the market is having downside continuation here. Still has taken the 50, now it's about to take the last. Now the next thing in the lower side, settle and overnight low. Volume, look at this volume here. 50 minutes is may end being up here, maybe. Value is inside value. You know, the market has, this could be the potential destination of this trade, this level, the repair of this level, which coincides with overnight low. And we may have some, you know, to remove this buying, market may come maybe around this area. I'm not saying that's the market was going to do. No, you always have to monitor your trade. And if you don't have a trade, you have to monitor what the market is doing all the time. Remember where the market was bought from? Here, right? Right from the opening, 3 times. Now, bought from 50. Next thing we know, bought from last. This looks like a counter-action to overnight inventory here. I don't know. You know, and when market opens inside previous range, you know, the market's advertising chop there. It's selling chop. Remember, inventory is super long now. As long as this low remains, remember to keep an eye also. Don't forget what's happening in your daily, weekly, and monthly time frames. Remember, sometimes you know we have our plan, or we may have this information. We remember we have the 4423 level. Is that it is 44? This is a multi-time frame reference, right? But as soon as we open, as soon as the market opens, we throw out of the window what we have done in our homework. You know, and that's normal. That's something that happens all the time because that's how humans, that's how our brain behaves, right? We don't pay attention. This is not. It is very counter. This business is very counterintuitive. Market is still inside this value area. Looks like this low. You know, there could be some acceleration from this once the market take this low. That can be the market. That's what the market. I think I want to see if there's I have nothing here. Right? I'm just thinking of scenarios here. Now we have an area that heavy volume. This area here, right above half back here. I want to see what the market does in the next period. If the market can take this high volume area out, if it opens down here, if it is bought from this, I mean, if it's sold from this level, or if it's just taking out and keeps its way up high. You know, this is the second time the market comes to this level here. 2 times the market has already came down to here. 7 minutes left in this period. Okay, this is when the market has, you know, the last third or the last fourth, or the last fifth. I don't know what it is, 4.5, something like that. It's going to have, you know, either rejection of the movement or continuation. The thing is, what is the movement now? Right? Is the market going lower or is the market going higher? What do you think? Think about that, right? What the market is doing? It's going higher or it's going lower? You can give an answer to both, and it can be different to both. and it can be right. Both can be right. That's the crazy things of markets, right? If you would see the short, very short, if you follow price, okay, this market is going lower. And if you open, you know, kind of like zoom out a little bit, you will see that this market is going higher. You know, there's some pullback too, maybe from, you know, this is a very, this level is, I think this is short term, very short term focus. Pull back to daily halfback on this day. As market was bought from this level, and notice well the overnight, all of the overnight was bought from 182,000 here. Now let's check, for example. I want to check, I want to show something here. I want to show something here. Is this alright? Okay. Let's see. Right. How much volume do you have in the overnight today? 182. 182,599. Okay. Notice what the other days. Last week. 400, 300, 300, 300, 2,000. 200, 400, 500. You know, this is one of the lowest days. Okay. What the overnight was doing was going higher, but this is one of the lowest days. You can see there's something going on here now, right? Something has changed. Huh? Something has changed already. Now, I am not anxious to do anything here now. What's volume? Look at it's 3 more minutes to go, something like that. It's really low here. Kind of, it seems like we are back to normal, you know, quote unquote normal, right? Because these days were low days, low volume days. There is something has changed here now. This is very, very low, brother. This is going to be like how much? Like 30% lower. That's unbelievable. Very low. We have 400,000 now. It was 650. Boy, that's very low, man. I just tend to be aware of what's happening. Remember, what matters is what the market is doing now, not what the market will do. Now this area is widening here. You know, we have 11,000 here, 11,000, 11,000 here, 11, 11. Now there is good volume. This is a really wide area of volume here. This is the first period, okay? This is not this is accumulated, but this is the first period because we only have one period here. It was unbelievable last week, you know, when we were down here, down here, this volume was unbelievable, right? This was like 25, 30,000 on the first period. When we watched that, when you watch that, oh no, this it's kind of like it's just like when you drive, right? When you drive, you are not watching every single thing that is in front of you or behind or beside you. What we monitor when we drive is the changes. You know, we can be in the highway, on a street, on the road, and what catches our attention is when there is something unusual that happens relative to what is happening at the moment. If we are on the highway, if there is some, you know, we get used to the traffic that we are having, the speed of the traffic, for example, and if we see something, if something is super fast, that is the thing that will catch our attention, okay, not the other thing. And that's kind of, I don't know, I speak it clearly here, but that's the things that I try to that those are the nuances the market has. This is small subtle changes that happen. Remember, all this volume here was made in the freeze period. We are inside value area. Then let me close this thing. That's my alarm. Notice again where this market is being bought from. Right? It was bought from, remember? It was bought like 2-3 times from the opening. Now again it's being bought from the opening. Alright? Very mechanical trading here. Very mechanical trading. It's a yearly indication of who is behind the trade here. What kind of traders are our competence here? And look at this. Look at this level here. It's just incredible here. I think the short covering is over here now. Or it can start to fade now. Now, how much that is? Boy, that's 30% lower. 33%, 33.34% lower volume than Friday. That's unbelievable, man. It's really low there. Bonds have already taken Friday's low, but as I say, I think the market is maybe decoupling from the bond market now. What's happening with crude oil? Let's see. I think if the market starts focusing crude, it will take more time to show up. Crude is having a rally here. Yeah, no, it's an inside day so far, crude oil. Oh, boy, look at this market. Am I right? Has the market stalled at this level? Did you see that? How my charts are frozen here. 81. Yeah, my charts are frozen. This is 83. Right now it's 81. God damn it. Come on, man. Don't do this. Oh, boy. Well, yeah, okay, it's right there. The market didn't do this sudden movement. My charts were frozen there. Now, where the market is coming from? Hard back, right? This is a heavy area here. There's a lot of volume here in this area here. Look at this. This is the daily profile, the accumulated daily profile of Friday. The market is being bought right from here. I want to see the market. If the market is bought from here in the past, there's some upside content. But what happens if the market takes this heavy volume out? That's the question here. Also, right now, is in this heavy. There's a lot of blocks here in this area. Don't like this. God damn it! Look at this high, man. It's coming from POC. This is. This is not safe. It's very risky. This market is very risky. Both sides. It may have a big break here, like really fast, but I don't want to be part of that. I think I don't want to do that. Be aware of this level here. Okay. If the market take this level here, it's 43.74.50. What the market does relative. Now this is not good. 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 What do you do here? It's very important. I think if you somehow can have a market profile chart, this gives us way more information than candlestick charts or bar charts. It's very useful. And remember, these market profiles are just a way to organize data. It doesn't tells you or tells me where to buy, where to sell. It's not for that. I don't trade market profile. It's just a way to see the market. This is how. It's another way to organize data. And then you analyze the data, put things in context, and execute. Remember, in the morning when the market was up here, we were talking about continuation. What's the continuation of this movement to the upside? First taking overnight high, value area high, Friday high. The market didn't do that. Okay? Now, the market starts to sell. Okay, what's the continuation of the downside? Okay, what's the continuation? Remember, always keep an eye on your clock as well, and you watch as well. This is not always that happen, but you will see when you start to see watching, for example, your clock. You will see what happens. Maybe when the market opens, when the period opens, what happened at the first 5 or first 7 or first 10 or first 15, but the thing is, if something happens, it doesn't always happen, or it doesn't happen all the time. That is because markets are always evolving, the markets are always changing. And the thing is, when we have a strategy, sell this, sell that, you are assuming the market is static there. You're assuming the market is something that you can study. You're assuming the market is a scientific thing. The markets are not scientific. Markets are more like very rational. There are not 2 days that are the same. Now, this is the first 7 minutes here. The market did not have continuation here. That's what I observe. That's why I observe in fractions of 7 now. The first 7 minutes, usually the market has to have some continuation. If it's going to have continuation, happens in the first 7, or even not continuation. The market picks a direction in the first 7. It didn't, right? It left a really bad low here. I don't like this at all. Remember what do we have below? Every single freaking low is poor or weak. Now there's another one that is poor and weak. It's poor because it doesn't have excess, and it's weak because it's last. That's when the market closed on Friday. This is adding just more weakness. It is going to be corrected? I don't know. But the odds, if I take a long here, are against me. If I take a short here as well, the market has momentum to the upside. The market is trending to the upside. Regardless that this is a weak movement, regardless that the structure in the lower side is terrible, it's one of the worst I have ever seen, still there carries some risk. Tremendous risk, because I would be stepping in front of the train here, trying to stop the train, guessing, or hoping the train will stop, not just stop, but go in the opposite direction, going in my direction. I'm expecting 2 things here, right? The train will not run me over, and will stop on their tracks and go backwards. That's the risk of the short side here. And that's what Jim says, right? But Jim says it's better to be a little bit late than too early. Sometimes we try to up from the movement. I know this market is really bad. I'm going to be short. I have to be short. This is too much already. And we are very impatient. We try to short the market, and we short several times, multiple times. Every single time the market stops out. Or we lose, we refuse to close, or we are squeezed. And by the time the market finally reverses, we are already mentally exhausted, and we cannot take the trade because we have lost several times. I'm not saying that I am expecting a break here. I'm just watching the market. The lack of volume here, right? The lack of volume here, tremendous, significant decrease in volume. 30% is just a tremendous volume here. Oh, I was saying the volume, low volume, this could be also an indication that this movement that's happened. Here's just a contraction to short to 100% long inventory. Okay, market's having continuation. Next thing, this low here. It's very weak here from Friday. After that, the late laggards from this movement have already been removed. Continuation, we see the market taking this value very low and getting trading towards the lower side of this range. But market is still inside range, inside Friday's range. It's unbelievable also how the bigs, how the bigs, it is 15. The risk, the VIX is supposed to reflect the risk the market has. I consider this market is very risky, but the VIX doesn't show it. And the VIX is supposed to be an index, the measure of risk. That doesn't do it it is not a good index. Alright, settle. Okay, we have these two things, right? Settle here, and this big volume here. This big area here. This area here now has been taken. It's not a reference to me anymore. You can see the market is having done some extension, right? I mean, continuation, no extension, continuation. Has taken this opening, then 50, then last. Now it's stepping at saddle. Continuation, we see the market taking saddle. Next thing, they will have back. Now you are seeing something here. Now, once this level is taken, if it's taken, right, which will mean the market is having continuation. Right now we are about 14-minute mark. This is when the market confirms, to me, from my point of view, when the market confirms or rejects the movement, what the market is doing at this exact precise moment. Okay. if you have any question, please just let me know. You want to share something, just let me know. Okay? Well, market's having continuation, right? Has taken settle. The next thing, and I think this is my main thing. And the market now is very weak. This low is absolutely weak. This is really bad low. But we still were inside previous day range. Notice where it's being bought from. Now you may see there is nothing here, right? Usually the traders saw this as the overnight low, but I think today it's more relevant because this is the pullback low here. If there's something here, if you have this day, this trending it wasn't trending day. It has a pullback. It's a rotational day, but you can see the market trying to have direction here. And the action was to the downside. If this low is taken, it means that this movement, the late movement on Friday, is the one that we are currently experiencing. The action is to the downside. But if this low stays, the previous movement remains. The market is rejecting this level here. But everything has to be seen in context. What it could mean now, for me, the analysis or the think or the thoughts that I'm having from this moment relative to this low here could be completely different in another context. Remember, context is everything. Context is everything here. Notice, do you remember what traders were doing last week? Buying every single break was being bought. Or keep doing the same. Now, but I don't know, man. This is really weak here. This is really bad here. It has excess though. It has excess, but very mechanical, no? Well, 17 minutes, 3 minutes into the 14. This is when the market, for me, after the 14-minute mark, when it starts showing some extension, acceptance of the movement. The field 7 showed one thing, the 14, and then the last 7 are also important to me. The market can do some sideways trading, go back, a high, low, whatever here. But the last 7 again would be important to me. This could be a rally, for example, of this, because the movement's to the downside here, right? The shortest time frame, which is the intraday, right? Remember, context is everything. We have one movement in the daily, weekly, and monthly. Okay? Remember, don't forget about this level up here. Value is inside value. Market is still going to the upside. If the value goes, becomes if market starts to overlap, for example, that would be one thing. Or start moving lower, that's a development. Right now, nothing has changed. Nothing has changed relative to the last week. There's no change here. The movement is to the upside yet. The trend is to the upside. Momentum is to the upside. But there is some signs of change. This is one thing, right? This here, right where the market is at right now, the volume, this could have been the expectation for the first period, just to confirm that what happened last week is having continuation. We are having more of the same. This has changed now. Has changed. Look at where volume was on Thursday and Friday and where it is now. There's change here. Something has changed here, or something is changing. We can see change in real time here. But to me, brother, this is be a really, really hard market. It is one thing to talk about the market, to describe what's happening, and another thing is to take action, right? Capitalize on what the market is doing. The five stages of, if you have read, I haven't read Jim Dalton's book, Marketing Profile. Oh no, I think that was Stallmeyer. I think Jim's is Mind Over Markets. You know, one of the five stages of learning are novice, beginner, confident, proficient, and expert. Novice, we all know what novice is. Beginners is when we start to understand about the market, what are the dynamics on the market. Confident is when we finally, have a grasp about the dynamics of the market, and we may start, to learn or to take advantage of that. Proficiency comes when we become profitable, consistently profitable. An expert is a culmination, one of the highest stage of learning. And regarding markets, we never stop learning. We are always learning. If you are one of those persons that feels uncomfortable being uncomfortable, you need to think, you need to rethink about your choices. Because you are never going to be comfortable here. You are always going to be out of your comfort zone. When you are in your comfort zone, when you are feeling comfortable, actually that's a sign. That's a sign that something can happen to you. Something bad can happen to you. So be aware of that. If you are like that, you know what you have to do, no? It is always better to know what can happen if we do something, we are some way, and to not knowing, being ignorant of what may happen to us and still doing the thing, right? This is not to discourage you. This is actually, I'm trying to encourage you to learn, to be aware, to know yourself. Because this business has a lot to do with what we are, what we do, more than what the market does or what other people do. It's very counterintuitive, right? Very counterintuitive. Now I'm listening to this book, Simple Rules, by Donna Sue and Kathleen Eishart.
Funding was scarce during the Great Depression, and the Rockefeller Foundation, with an endowment nearly twice the size of Harvard's at the time, was one of the most important patrons of scientific research in the world.
It's very interesting, very, very good. Always, because I like to be in front of the market all the time. I don't want to miss a thing. I am quoting Smith here. I don't want to miss a thing, because I can lose context. But sometimes you just it's super boring, right? To not to lose my focus, I tend to do something productive, like watching this kind of videos or listening to this kind of books. It is 10:25. Market opening inside previous day range, some guidelines. Opening inside previous day range, advertised chop. They're also having a rotational day are high. What's a rotational day? It's a rotation that goes to the upside, to the downside, upside, downside, upside, downside. That's a rotational day. Right? Chop is when the market has a lot of back and forth. The only charts that I use are market profile. I use these charts. I don't use other things. trade. I don't use 5 minutes, 15 minutes, I don't use that. I use daily charts to monitor the market. Like in here, for example, I have one chart open, which is this one, right? I have the monthly, weekly, daily, and I have here the bond market. We have the bond market has taken the low of Friday. It has taken Friday's low here. Oh no, the 30, the 10 has not yet. Yeah? We have significant gap here below. This is I have open. It's having accumulation. Notice, look at this. You know? This is the daily. Today's daily. This is A and B. Notice where the market has been bought. To begin with, where the market has been bought. Yeah? The low, this high accumulation. Right? It's building value on top of this. It's adding more volume to this area here, and adding higher actually. We all have to be aware of the multiple time frames. You know. Not just that's why when you look too close, when I used to use 5 minutes chart, 1 minute chart, we hyper focus too much, and you know, it's just too much noise that goes in there. I feel really uncomfortable about this low here. It is excess. Market has excess. Today's profile has excess. This is only 2 periods, right? But this, I don't feel nothing good at all here. The overnight has been rebalanced, as the overnight inventory has been taken care of. Volume being lower, and also indication that this could have been just a contraction to overnight inventory. You know? Now I want to monitor volume now. Is there an increase? Is there a decrease? Now the next thing the market, you know, might have ended up here, right? To be 33% lower, but I think it's going to be even lower now. But notice where it is now. We have three more minutes to go to the end of this period, and it's back. But market is back where it was. Huh? Look at the previous days here. Let's look at this previous 1, 2, 3, 4 days. Last week and last Friday, the Friday before, the 2 weeks ago. You know, the market is about that. About that. Huh? Right where it used to be. Okay, we are back in business as usual, I believe. This high is no good, low is no good, high is no good, low is no good. I mean, this can go in any direction here. The rotational days. Right? Remember also. Okay, don't forget about this level here. You know, this is a multi-time frame reference that is exponentially weak here. Don't forget also the weakness of this movement. The current movement to the upside was crazy. That's unbelievable. It was a vicious short coming rally we had here. Be aware of both you know, be aware of what we have on both sides of the market. All right. If there's no questions, if there's any questions, I guess I will call it a day. It is 10:30. I wish you guys really good rest of the day. Stay safe. Have a wonderful trading day. Bye bye.